Hey traders, welcome to the next lesson. In this lesson, we're going to focus on the different ways the supply and demand zones can form and why do supply and demand zones behave the way it does. And that will be covered by discussing the psychology behind the formation of these supply and demand zones. So let's get started. So first of all, as we were detecting the supply and demand zones, I gave you heads up that supply and demand zones can form with more than one base candle as well. So as you can see here, there is the formation of this drop base drop supply zone with one base candle, two base candles, and three base candles. Now these base candles, the color or the nature of the body of these base candles don't matter, because all the base candles do is they represent a ranging market structure. It does not matter if they were bullish or bearish because their bodies are very small, and the color or the nature of these rally and drop candles does matter because it determines whether it's going to be a supply zone or a demand zone. So this is the formation of supply zone with more than one base candles, and this is how it will look like. And here we can see the formation of a demand zone, that is rally base rally demand zone. In this one here, there is this one base candle, there are two base candles, and then there are three base candles. But in all of them, one thing you see is we have to draw the supply and demand zones at the high and low of the base candles. For example, here we can see that the high of this base candle, these base candles, is here. So we will not draw the supply zone at the high of this first candle, but we will take the high of the overall base candle. So here we can see the highest high within these base candles is here, and the lowest low within these base candles is here. So that's where we will draw our demand zone. And similar is the case with the supply zones. We will take the highest point or the highest price level at the base region and the lowest price level at the base region in the base candles to draw our supply zone as well. Now let's discuss why do supply and demand zones behave the way it does. So here, first let's focus on a demand zone and let's discuss how this demand zone gets created and why do we anticipate that market is going to come back in order to pick the orders from here and then move in the bullish direction. So for that, let's imagine a scenario. All right, so let's imagine a scenario that there is no zone formed yet. There is only this rally candle, and then there is this base candle. Let me just move this rally candle, this last rally candle, out of a picture so that we do not know that there is this demand zone forming here. So now what does this represent? Now this represents that the first candle is a big bodied bullish candle in which the market is moving in the bullish direction very impulsively. So this is this first rally candle here. Now after that, there is this base region. Now in the first phase, we are sure or we know that market is moving very impulsively in the bullish direction. So with the formation of this next candle, what happens? Market starts to form a ranging market structure like this. Now this ranging market structure tells us that after this very big impulsive move in which the buyers were in control, in this phase here, neither the buyers nor the sellers are in control of the market. So till now, till this level here, we are not sure which way the market is headed. Now what happens when a third candle appears, and that candle is a big bodied bullish candle? Let me just move this one from here to into the picture here. So now with the formation of this third candle, everything changes, because first there was this big bodied bullish candle in which buyers were in control, then there was this ranging market structure, and we did not know which way the market was headed. It could have gone either in the downward direction or it could have also moved in the upward direction as well. So with the formation of this big bodied bullish candle, this rally candle, it is sure that something has happened here, due to which this ranging market structure has been broken and market continued to move in the bullish trend. So that something is what we call the demand, and that is created by the institutional activity. When the institutions place a lot of buy orders in this region here, because of that the demand rises or the price rises and it moves in the bullish direction, and that's where it matches with the natural principles of supply and demand, because whenever there is a lot of demand for something, its price will rise. And that is exactly what's happening here. Institutions are placing a lot of buying orders in this zone here, due to which its price rises and there is the formation of this third candle. Now, after the formation of this third candle, only after the formation of this last rally candle, we say that there is the demand zone, and we can draw this demand zone around these base regions. So let me just go ahead and move our demand zone back into the picture. And here, now we know that there is this demand zone and something happened here, or the institutional activity happened here, due to which the market moved in the bullish direction. Now, after this demand, when the market moves in the bullish direction, now it's only natural to anticipate that because of this demand, there are some orders that are left behind, and market will come back to pick that demand, and then again it will move in the bullish direction, because same thing will happen once those orders get executed. A lot of demand will be created, or a lot of demand will be activated by the buyers, and that will lead to increase in the price of the currency pair. So because of which, after the orders get executed, or after the market comes back to this region, after picking those pending orders, the market will again move very impulsively in the bullish direction, and that's where we will be taking profit in this last wave here after the picking of the orders from this zone here. So this is how the demand zone works. Now, we always place pending buy orders or buy limit orders once the zone forms. For example, if the zone is formed here at the close of this candle, we will go ahead and place a buy limit order at this high here, and we'll place our stop loss somewhere around here below the low of this demand zone. Once the market comes back, our orders will get executed, and then once the orders are executed and we are in trading position, when the market moves in the bullish direction after picking this demand or buy orders, then we will take profit somewhere around here according to our take profit strategy or risk management strategy. Now, similar thing is happening, the very similar thing is happening here. When there were two candles till this here, when there were only two candles, we did not know which way the market was headed, because there was the formation of this drop candle and then there was this ranging market structure. So at the end of this second candle, we did not know what is going to happen. But with the formation of this third candle, the market makes a decision. It makes a decision to move in the bearish direction very impulsively. And what led to this decision was a lot of selling activity of institutions that pushed the market in the downward direction. So now when the market again comes back to this zone here, this region here, it will pick that supply, and then again, because of those sell orders getting executed, the market will again move very impulsively in the bearish direction, because it's again matches with the same natural supply and demand law, that whenever there is a lot of supply of something, its price falls down. So because of that, when the sell orders get executed, the market will move in the bearish direction. So this is the psychology behind the working of supply and demand zones, and this concept is so powerful that you will see it working and giving you above 30 risk to our ratios, which is really phenomenal, as you will be seeing in our next lessons. And that's why institutions always trade supply and demand zones, because they know that they have the potential to create the imbalances in the markets, and those imbalances are what we want to ride on, and we want to share the profit along with the institutions. See you in the next video.